Using a home equity loan to pay off your debt can be risky business. I'm Richard Blake, and I'm here to explain how to use a home equity loan to pay off your debt. I don't recommend ever using a home equity line to pay off your debt unless it's absolutely necessary, unless you're just over your head in debt and you need to consolidate it and get your interest payments down more so than what they currently would be if you didn't do so. One of the risks involved are you're actually borrowing money for depreciating assets as well as interest rates that continue to accumulate. Your home is a pretty sound investment over time, and you're really losing that investment when you start using it to borrow against depreciating assets. Nonetheless, it can be an option for certain people who need it, and what you do is the equity that is built up into the home, you can then pull that out from your bank. So, for example, if you purchased the home for $200,000 and you've owned it for 10 years and now it's worth $300,000, you can go to your bank, ask them for an equity loan, and that difference is going to be $100,000 that they're going to give you at an interest rate of whatever the current mortgage rates would be. So your credit card debts, the interest rate there may be 20-25%, whereas on your home equity loan, it's only going to be 6%. So you can use that $100,000 to pay off these credit card bills and have a much lower interest rate involved. Okay? I'm Richard Blake. It's a little bit of how to use a home equity loan to pay off your debt. I hope that helps you. Have a great night.